Right now on the Home Strategist, most people think a down payment is just something the bank requires, like some arbitrary rule that lenders made up. But that's not what a down payment actually is. A down payment is your ownership stake. It's the difference between buying a home and borrowing one from the bank. And the size of that stake matters a lot more than most people realize. Today, I want to talk to you about why down payments exist, why 20% became the standard, and why I personally believe buyers should care about having real skin in the game. I'm Dr. C, and you're watching The Home Strategist. When you buy a house with a mortgage, you're not really buying the house, at least not yet. You and the bank are becoming partners in that property. The bank owns most of it. You own the part that you paid for. The down payment is your initial ownership share. So if you put 20% down, you start off owning 1/5 of the home and the bank owns the other 4/5. That ownership stake changes the psychology of the entire deal. Because when you own something meaningful, you treat it differently, you maintain it differently, and you fight harder to keep it when things get difficult. That's the real purpose of a down payment. It demonstrates that you're invested. A lot of people ask why the magic number is 20%. Why not 10? Why not 30? The truth is 20% isn't some perfect mathematical formula. It's basically a risk threshold that lenders and investors settled on over time. At 20% down, a couple of important things happen. First, the homeowner starts with some real equity, not just a sliver. If the market does take a dip or the homeowner needs to sell unexpectedly, there's still some room to get out without being underwater. Second, the lender has a safety cushion. Homes can lose value. People lose jobs. Life happens. 20% gives the deal enough margin to absorb some of those shocks. That's why most conventional loans stop requiring mortgage insurance at the 80% loan to market value. That's the line where the system says, okay, this borrower has enough skin in the game. Let me say something that's not always popular in today's housing market. I'm a big believer in skin in the game. Owning a home is a major financial commitment. If someone doesn't have the ability to save for a down payment, there's a very good chance that they're not financially ready for everything else that comes with owning a home. Because the down payment is just the beginning. Once you own a house, you're responsible for all the repairs and maintenance, the replacements and upgrades, the taxes, and the insurance. Things break, things wear out, and when they do, the homeowner has to pay for it. A down payment demonstrates something important. It shows that the buyer has the discipline and the financial margin to handle the realities of homeownership. In the last couple of decades, we've seen more and more programs that allow very small down payments, sometimes even zero. Now, technically, those programs can help people buy homes sooner, but they also put buyers in a really fragile position. When you start with almost no equity, 3 things happen. First, it becomes very easy to end up underwater if the prices dip. Second, the homeowner has very little financial buffer if something does go wrong. And third, and this is really important, if things do go sideways, low down payments make it much easier for homeowners to simply walk away instead of fighting for their home. And that's where a lot of people get into trouble. They're homeowners on paper, but financially they're standing on a very thin ledge. Whenever someone buys a home with less than 20% down, they usually have to pay something called private mortgage insurance, commonly referred to as PMI. I'm going to be honest with you, I am not a fan of PMI. It's essentially insurance that protects the lender, not the homeowner. However, it's the homeowner that pays for it. From a financial perspective, PMI is the system's way of saying, you don't have enough equity yet, so we need extra protection. It's also a way of kind of saying, you're not ready. Now, some buyers accept that trade-off, and there are certain situations where it might make sense. For example, PMI might make sense when a family has a special needs child, and the only practical way to create the accommodations that child requires, things like ramps, widened doorways, or specialized bathrooms, is to own the home rather than rent it. But personally, I think most buyers are better off avoiding PMI entirely. And the simplest way to do that is to reach that 20% down payment threshold. PMI should strictly be about necessity, not impatience. Now, there are a few ways that a buyer can get to 20% that don't involve taking on a bunch of additional risk. One option is simply buying a less expensive home. I know that's not always the fun answer, but lowering the purchase price automatically reduces the down payment amount. Another option is waiting and saving longer. Homeownership isn't a race. Homeownership is not an entitlement. Buying 1 or 2 years later with much stronger finances can make the entire experience more stable and, frankly, a lot more enjoyable. Some buyers also combine their savings with gifts from family. That's a very common and often allowed process in mortgage underwriting. And of course, some buyers use the strategy of buying smaller and upgrading later. Start with something modest, build equity, then move up when the financial picture is stronger. That's what a home strategist does. At the end of the day, a down payment isn't just a hurdle to clear. It's a signal. It tells the lender you're committed. It tells the market you're invested. And most importantly, it gives you some financial breathing room. The goal of buying a home isn't just getting the keys, it's building stability. And the size of your down payment plays a bigger role in that stability than most people realize. In a future episode, I'm going to get into talking about how buyers can realistically save for a down payment without feeling like it's impossible, like it's some mountain that needs to be climbed over. Because while 20% may feel impossible at first, there are ways to get there faster than most people think. But understanding why that number matters is the first step. Thanks for checking out The Home Strategist. If you appreciated this content, give us a like, drop us a comment, and please subscribe to the channel.